All right, let's get you up to speed now on more layoffs continuing to hit the economy. Crypto exchange platform Coinbase cutting about 1/5 of its workforce. That's about 950 employees after already announcing it would lay off 18% of workers in June. This is all part of a plan to slash expenses by about 25% for the quarter ending in March. CEO Brian Armstrong telling CNBC, quote, "The FTX collapse and resulting contagion has created a black eye for the industry," adding there's likely more shoes to drop. Investors cheering that news. As you might expect, shares of Coinbase up more than 8% on the day, but still been a very rough go, down more than 80% over the last 12 months. Shauna, the question is, as we continue to see more layoffs primarily in the tech and specifically the crypto sector, will this represent some sort of beginning of layoffs, broader speaking, with the economy? We haven't really seen it, with a few exceptions. I guess you could throw Amazon into that a bit, but still really tech layoffs there. We haven't seen mainstream. We're not cheering for them, but in terms of a Fed story, they do need to see more job losses. Most think they need to see that unemployment rate about 5%. Right now, 3.5%.
And it's unclear how we're going to get potentially to that 5% level when you're looking at an unemployment rate that will not move higher, remains historically very, very low. When you take a look at the news today, I think we can categorize what's going on with Coinbase very similar to what we've seen from a number of those tech layoffs. This company scaled very quickly during the pandemic when it certainly did see a surge in activity, and scaled way too quickly. And as a result, we're seeing a number of layoffs. Like you said, this is the third round of layoffs for Coinbase. And similar to what we've heard from Amazon, just taking a look at some of the other sectors here, Meta, Salesforce, over the last several weeks announcing layoffs, saying that they simply just scaled way too aggressively during that burst of activity. When it comes to crypto, though, the comments that we got from CEO Brian Armstrong, they really stuck out to me, because this means that potentially some of that crypto winter that we have been discussing may not be done. The fallout from FTX, the collapse there, what that means industry-wide. Maybe we could see potential competitors, Coinbase competitors, what he alluded to, going under over the next several months. And you got to ask yourself what that means for Bitcoin. As we take a look at Bitcoin, still above 17,000. I think the resilience that we have seen in Bitcoin, the fact that we haven't seen a larger drop over the last 2 months, has taken some people, really taken me by surprise, Dave.
Yeah, really, since that FTX collapse, when most thought the floor would drop straight out of Bitcoin and Ether, and it really has not. And in fact, to your point, it kind of feels like, looks like in the charts, like it's beginning to stabilize around that 17,000 mark and north of 17.3 today. So yeah, it looks like most of the damage has been done to crypto, largely speaking. And maybe there's some upside ahead, although, look, we've still got some more interest rates to come from the Fed. Generally speaking, not going to be good for the NASDAQ and high-risk sectors like crypto. So we'll see. I don't think anyone's jumping back in, but certainly appears to stabilize more than most expected.